Alright, so today we're talking about compound interest. Now, compound interest is something that's so simple and so straightforward that you're going to think it's a total scam. So, compound interest is basically when your money makes you more money, which in turn ends up making you even more money. So, essentially, that's interest on interest. Okay, so let's say, for example, you deposit $5,000 into a savings account that gives you an interest of 5%. That means every year you're going to get 5% of that $5,000. So basically, while your initial deposit grows by 5%, the next year it's going to be 5% on the deposit plus the initial interest you've gained. And that cycle keeps on going on and on and on. And what happens is your money ends up working for you and making you even more money. And it's also important to note that the more compounding periods you have, the more money you're going to make. So if you invest a certain amount every month on top of that initial deposit, you're going to gain more money than if you just put a certain amount every year. So the more frequently that you invest, the greater your return is going to be. So you might be thinking that this concept sounds really nice, but how do we implement it in our own lives? Well, it's very simple. We just invest in index funds. So basically, you can imagine an index fund as a basket that tracks certain components of a financial market. So for example, the S&P 500 is an index of the 500 largest companies in the United States. And when that index goes up, that generally means that the overall market will also go up due to its impact it has on the overall market. So you can invest in an index fund of the S&P 500. So such as Facebook, Amazon, Google, you are buying shares of each of those companies listed in the S&P 500 index, and you are getting paid the dividends of those companies. Now, dividends is a certain amount that a company pays out to its investors as a show of thank you for your investment base. And so when you invest in something like an index fund, you have broader market exposure, which means there's less risk and more profit over a long period of time. So the S&P 500 is an index fund which tracks 500 of the biggest companies. Well, there are also other index funds, such as VTI, which tracks the overall stock market, as well as VWO, which is an index fund for the emerging market. So when you invest in all three of these index funds, data has shown that you receive an annual interest of 8%. So now let's get these numbers into perspective. So if we start off by investing with an initial balance of $2,000 and then add $400 a month with an annual interest rate of 8%, which is being compounded annually, it will take exactly 37 years to make $1 million absolutely passively. Okay, so how can we access these index funds to invest in? Well, luckily there's been an influx of new brokerages accounts, making it even more easy for people our age to get invested into the stock market. So since I'm based in the UK, I use Trade 212. If you're in the US, you can use Webull, Robinhood, TD Ameritrade. There's so many. You just need to do your own research and find what suits you best. Alright, so now once you've opened up an account in one of these brokerages, you should open up an IRA account, or if you're in the UK, it's called an ISA account. That's basically your retirement account, which your profits don't get taxed. So with Trade 212, I'm able to invest $20,000 a year, and all the profits I make over however long period of time, I will not be taxed on. So essentially, if I open up an IRA account and invest in these three index funds with an annual return of 8%, in 37 years exactly, I will make $1 million absolutely passively, tax-free, adjusted for inflation. And all this income is coming to you absolutely passively, which means you don't have to do anything. You just have to put in a certain amount every month. And besides that, you can be focusing on your passions, spending time with family and friends, helping your sister get out of the dishwasher, or finally turning that idea into a business. Now, I know some of you would be like, well, when I'm 60 years old, I can't do anything. Oh, well, I don't want to be a millionaire by then. Just look at this picture. See, that's right. Any girl you want. No more simping. Just trust compound interest, and you'll be there. And look, all it takes is contributing a certain amount every month. It's about being disciplined and making that extra money to save, or as well as getting a side job to make that more income. You know, you may think you need that brand new off-white belt because that $200 extra is going to make your clout levels go up, and you just be disciplined and save. It's going to do you so much better in the long run. Okay, so now what's my personal plan? Because I said I'm going to document my whole journey. So I'm going to start off with 400 pounds, which I saved myself, as well as made through working. And with that 400 pounds, I'm going to experiment with a variety of different things to increase it. So my goal by the end of August is to have 2,000 pounds and use that 2,000 pounds as my initial deposit for my investment in the three index funds which we recently talked about. So now comes the question, how do you make money every day to contribute to that 200 or 400 pound goal a month? So I'm going to be doing many different things. The first starting off with day trading. Now I know day trading has a negative narrative surrounding it, but I will get into it, how it can be beneficial, how it can be detrimental. It all depends on you, which will be coming on in the next few videos. So these are concepts that are quite simple yet so effective. And one thing which I always hear time and time again is when you're investing in the stock market, it's not about timing the market to make that one big bang and cash out. It's more about timing the market always beats timing the market. You get more experience, more knowledge, and like that you're only going to grow and make better habits. So I hope you gain value from this video and that it helps you get started on building a more stable financial future. And in 40 years you become a DILF, an absolute god. And yeah, if you have any comments, any suggestions, please leave them down below, and I will see you in the next one.